Commercial bank CEOs are calling for sobriety to prevail in the ongoing debate around capping interest rates. KCB CEO Joshua Oigara has added his voice to the debate, saying interest rates are already on a gradual downward trend, so borrowers should expect cheaper rates by 2017. But why are banks insisting on having market-driven rates? KTN's Aby Agina now reports.
Kenya is among countries that has one of the highest interest rate spreads across East Africa. Banks have been making double-digit profits, and now this is being challenged with a bill passed to cap the same rates that have catapulted banks to profitability.
Commercial lending rates are high. I've been on record as saying that.
The proposed bank amendment bill seeks to control loan interest rates at 4% above the indicative central bank rate of 10.5%.
The interest rate went up to 26% at the industry in November last year. The rates are now down to 18.3 as at the end of July. It's just that the curve has not moved as fast enough, but the curve is actually in the right direction.
The solution to addressing the problem of the cost of credit is not as simple as just passing a legislation to cap the interest rates.
Bankers are, however, not going down without a fight. They maintain that interest rates have been going down to an average of 18%, with some analysts believing it's still far too high for small and mid-sized borrowers.
It took longer for the treasury bills to come back down. The interest rates are also following the same route.
When it goes into legislation, of course, it becomes a little bit tricky.
Pundits believe that setting controls on interest rates is a good move that will tame banks and force them to lower rates, something that will spur competition and in the long run benefit the common man.
What we agree about this bill is that there must be transparency of pricing. The way banks disclose their exchange rates is the way banks should disclose their interest rates.
The push to bring down the cost of credit in Kenya continues to gather momentum, even as bank CEOs maintain that they would prefer a gradual decline in the interest rates rather than a legislation that caps the interest cost. Aby Agina, reporting for KTN Business in Nairobi.